If you have ever considered investing in gold, you probably know or have at least heard of the name Peter Schiff before. He's one of the most prominent gold bugs in the world, and also a well-known critic of the US government and Bitcoin. His company, Euro Pacific Capital, runs a $200 million gold fund. And over the past 10 years, he has been a strong advocate for gold, mainly over fears of the weakening US dollar, driven by the US government's debt-fueled growth policies. His three main investment convictions can be summed up as gold being a good store of value, the US dollar rapidly weakening in value, and Bitcoin having no intrinsic value. While Peter Schiff has made some good arguments and also built himself into a well-respected business figure, looking strictly from a performance basis, over the last 10 years, his convictions have led to him seeing meager returns with gold, missing out on Bitcoin, and also mispredicting a 10-year-long bull run in the US stock market. Here's how each of his three convictions have played out over the past 10 years. We will talk about how he got to each of these convictions, and why exactly things have gone awry for Peter Schiff over the past 10 years. But first, to understand how he got to where he is today, we must first take a step back to understand who exactly Peter Schiff is. Peter Schiff was born on March 23, 1963, in New Haven, Connecticut. His father, Erwin, was a well-known figure in the U.S. tax protester movement during the late 70s and early 80s, and was staunchly opposed to the federal income tax. In October 1985, Erwin Schiff was convicted of tax evasion and would continue to face problems with the U.S. government throughout the next 30 years. In 2005, he was convicted to 13 years in prison for multiple tax-related crimes in protest to the U.S. government. Schiff often credits his father Erwin for introducing him to the Austrian school of economic thought and for some of the libertarian values he now holds. In the early 1990s, Peter Schiff began his investment career as a stockbroker at Shearson Lehman Brothers. A few years later, in 1996, Schiff would leave the firm to start Euro Pacific Capital, a brokerage firm focused on investing in specific assets that distinguish themselves from the value of the US dollar and US dollar-based investments, namely gold and emerging market funds. Leading up to the 2008 financial crisis, Peter Schiff frequented CNBC, Fox News, and other major media outlets to share his contrarian outlook on the Federal Reserve and the state of the U.S. economy. He was one of the few well-known people who publicly warned about and predicted the 2008 financial crisis years prior, while most others dismissed his claims.
When you see the stock market come down and the real estate bubble burst, all that phony wealth is going to evaporate, and all that's going to be left is all the debt that we accumulated to foreigners.
Over the past 10 years, from 2011 to 2021, Peter Schiff's investment philosophy primarily relied on three investment convictions. Gold is a good store of value, the US dollar is a bad store of value, and Bitcoin is worthless. Peter Schiff's first main conviction of gold being a good store of value from 2001 until 2011 turned out to be true. From the January 2001 up until the end of 2010, gold saw an annualized return of around 14%. It was only after the 2008 financial crisis that Peter Schiff made several predictions and bold bets that turned out to be less than ideal. Schiff's primary bull case for gold is that the Federal Reserve's policy would cause a rapid decrease in the US dollar in comparison to other currencies. In October 2012, Peter Schiff made a bold prediction by saying,
I'm going to go out on a limb here and say that you like gold.
Well, sure. In fact, 1700, one day we're going to look back at 1700 with nostalgia. People are going to be shocked at how inexpensive gold was when it could be snapped up for such a bargain price. And it's not going to take too long, just in a few years. I mean, we're talking gold 5,000. That's not the ceiling. That might end up being the low end of the range that we're going to be into.
In that interview, Schiff called for gold to rise to $5,000, and when asked about the time horizon for this target, he replied, "I think you're going to see a big move sometime in the next couple of years." And here's how that prediction turned out. 2 years later, in October 2014, when asked to follow up, Schiff granted that, obviously it's going to take a little bit longer than what I believed at the time, but went on to predict that it'll go through $2,000 very quickly, and people will be upset that they didn't buy gold at $1,700. Over the next decade, gold would rally, but not until 4 years later near the end of 2018. In zooming out the past 10 years, gold sits at around $1,800, sitting around the same price it was 9 years earlier than 2011. While Schiff's recommendations for gold seems mostly genuine, having come from his deeply held beliefs he developed alongside his father, it's important to take all his market predictions with a grain of salt. Schiff's second conviction has been the weakening of the US dollar. Just like many other gold bugs, Schiff is a strong critic on U.S. monetary and fiscal policies, which he believes will eventually lead to the weakening U.S. dollar and investors turning to gold as a safe haven.
Remember, Ben Bernanke has promised to print over $1 trillion in 2013. I think he's going to print more than that. It's not going to revive the economy. It's not going to create jobs, but it will help destroy the dollar, and that is going to send gold higher.
This is exactly what happened in the 1970s. Gold saw its value skyrocket after President Nixon abandoned the Bretton Woods Agreement, which decoupled the U.S. dollar from gold.
Look at the history, right? The last time we had a major rally in gold was the 1970s, right? The 1970s were the result of the policies that we pursued in the 1960s of debasing our money. We were running big budget deficits, and the dollar collapsed. The dollar ended up losing 2/3 of its value during the 1970s against the yen, against the Swiss franc, the Deutschmark, and so investors moved into gold. You had a big move into gold. Gold went from $35 an ounce to $1,000 an ounce.
On top of gold, Schiff also believed equities in emerging markets such as China, India, and Taiwan would outperform the U.S. market over the next decade. In 2016, after a record year that saw his international fund up 35%, Schiff explained a big reason why he's investing in these countries is that they have companies with little exposure to the United States. The U.S. consumer, he said, is living on credit, has no savings, and the whole economy is headed for collapse, and I want protection against that. I'm trying to invest in markets and companies that are best positioned to do well in an environment where the U.S. economy is not doing well. Looking in hindsight over the past 10 years, inflation in the U.S. has been fairly average, sitting around 2% per year, and with no U.S. market collapse since 2008, the S&P 500 index has managed to outperform the vast majority of emerging market funds around the world over the past 12-year bull run. Schiff's third and arguably worst conviction over the past decade has been his bearish outlook on Bitcoin.
I mean, like some of my neighbors now are these crypto millionaires. They're living on, I see now on the beach. They weren't there a year ago.
Given Peter Schiff knew about Bitcoin all the way back in 2013, he missed out on buying the cryptocurrency at under $1,000. Schiff's main argument against Bitcoin is that it has nothing backing it and no real-world utility. Schiff also believes other alternative coins could come on the market and replace Bitcoin with better features, so it had no actual scarcity. As it would turn out, Bitcoin would go on to be the best performing assets over the next 8 years from 2013 to 2021. While gold's return over the past 10 years has been pretty terrible having not kept up with inflation, it only gets worse when you actually factor in the opportunity cost of not buying other investments. Gold offered one of the lowest returns out of any asset class. Over the past decade, Peter's Emerging Markets Fund and theory of a weakening US dollar has also been well off, having given a 15% lower annualized return in comparison to the S&P 500 index. The US dollar still remains the world's reserve currency, and hyperinflation or a US currency crisis never happened. At the end of the day, Peter Schiff's market predictions tend to be correct when gold rises and incorrect when gold falls. As for Bitcoin, it has been the best performing asset over the past 10 years. And still in 2021, Schiff remains firm in his conviction that Bitcoin is a bubble resembling the tulip mania with no intrinsic value. While other initial Bitcoin skeptics such as Kevin O'Leary and Elon Musk have since invested their own money in the cryptocurrency, even with his own son now putting 100% of his investment portfolio into Bitcoin, Peter Schiff still believes gold is where the true value lies. It's worth mentioning that given Schiff's company, Euro Pacific Capital, offers a gold fund, the company has vested interest in gold doing well. This is no different than all the people on the other side of the spectrum who own a large percentage of their wealth in Bitcoin and who actively aim to promote the cryptocurrency with a skewed bias.
But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin.
The important lesson here is to take all investment commentators' opinions with a grain of salt. Having now witnessed Bitcoin's meteoric rise, the stock market roaring to new all-time highs, and gold remaining flat over the last 10 years, one thing is for certain: Peter Schiff is having a bad decade. However, in 2021, with inflation now reaching the highest levels seen since 1970s, Peter Schiff may soon have his day once again in the spotlight, just like 2008. Only time will tell. What do you think of Peter Schiff's financial predictions and overall track record? Let me know down below in the comments. Also, don't forget to subscribe to the channel for more videos on the world of business every week.